Very quickly, guys, monumental breakthrough. The channel has just cracked 150,000 views. 150,000! And this level of achievement 8 months ago is unthinkable. So I really want to just thank you guys. And since then, my life has got so much busier with trading and YouTube that to keep on top of it and to deliver the level of service to you guys, I've actually stopped drinking to keep on top of it. But I mean, like for a month or something, just to ease off, to make sure I deliver the best service. And like, I know what people are going to say. Like, I know people are going to be like, oh, success is changing him. But I want to say to you guys, don't listen. Like, I will always be a G with love for the streets. And I am still a gangster. Tell me to hit the DF, and I'll be on that dance floor. But I could not have achieved this without you guys, so I want to do a massive thank you. And I'm going to read off some fans, and I hope I don't miss anyone, but here it goes. Mr. Mustang, Trade the Trend, Rita Spooky, Roberto Rodriguez, Lisa Dumper, Billy the T-Rex, John, David, Neverfail Gaming, The Gaming Trader, Philippe, Rich Flynn, I like this guy, Deep, Merton, De Mika Bra, Damaris, Marco, George, Robert, Andrew, Cheesy, Sarcastic Morpho, Lloyd, Jesus, not the real Jesus, Courtney, oh, Jetador, Rajnish, I don't know any Indian, I don't know if he is Indian, I'm sorry, but I love you, Ivica, Manny, Eric, and Louis, to name a few. Thank you guys so fucking much. Appreciate that, but now let's get into the show. So welcome to Stephen Johnson Stocks. This week I have identified 2 or 3 patterns that work, and I profited on them last week, and this week I didn't see them, so I started making some random trades and lost. And from the last 2 weeks, I mean, I'm down 50 bucks. It's really not a lot, but the losses have taught me to stick to my patterns only. And next week, if I don't see my patterns, the 2-3 patterns that I'm tracking, I will not trade. And I will stick to that. I guarantee it. And I can't wait to show you the patterns that I've been tracking in my Excel. But before I get into that, I really want to talk about losses, because a lot of people get pissed that they've lost. But for me, losing this week means that I am fixated now on only sticking to the 2 or 3 patterns that work for me. So if anything, the losses have empowered me. And you need to think about this. And the only way I can explain it is like, it's rolling with the salt rock of the earth, intertwined with the roar of thunder, and you create a motherfucking dose of rock and roll thunder! We will not fail! Turn the losses up! Turn the losses up! Learn to love them! Learn to live their dream! We will not fail! Free! I want to be quick on this because I don't want to spend too long on it, but it is also very important you guys get the gist of what I'm talking about. So first of all, let's just get the winning percentages kind of out the way. I'm looking at new strategies to take money out of the market, and I've identified a few that are very profitable, mainly based on what Tim Sykes does after watching so many video lessons. So the winning percentage isn't quite what it was, but in terms of my account balance lost, I mean, it's significantly better. It's definitely on the right track from losing 40%, 18, 10, 1, 10, 8, 7, 4, 10, 4. So it really is getting to that crunch point, and I've never felt more comfortable. And in terms of weeks, green week, red week, green week, red week, and then if I can get a green week next, like I've never pulled consistent green weeks together before. It's always been red before this, red. So the fact that I'm pulling out these green weeks is very encouraging, and I'm in this for 2 years, 3 years, not just like 1 year. And this is what I really wanted to talk to you guys about. So I've been tracking the first green day after like a 50-60% retracement. These are the retracements here. When a stock is up and then it retraces like 50%, 60%, 70%, and it has its first green day, I've been tracking like how did it close by its highs? What was its first green day? Was it up 10%, 15%? What was its next green day? How high did it get that day? And then I started working out based on a $2,000 stake in each of these first green days, if I was to buy them into the close within 1% of the close or 2%, and I looked for a 9% profit and 3% risk the next day, or a 3% risk and a 6% profit, how would it turn out? So making it more mechanical like a machine, but obviously I would have a further advantage if I was watching it. But just in terms of how would it look if a machine took my order and cancelled it at 3 or cancelled it at 6% profit or cancelled it at 3% risk? And the results are really interesting. So I found that basically if I invested $2,000 again and again and again over these 17 trades, based on a 9%, going for a 9% profit, I'd win 6 of them and make $1,020, and I'd lose 11 of them. But on the times that I'd lose 11, I'd only lose 3%, so I'd lose $770. And this is including commissions. I'd make $250. But if I only went for 6% profit, and I cut my losses at 3%, I'd actually make $360, which is $21 per trade. Taking this more into account, I started looking at where the first green day was failing and why, and I found that if it's the first green day after just one red day, it often fails, so don't buy the first green day after just one red day. If it's a doji candle on the first green day, it fails, so don't buy it. And if it's an overall long-term downtrending chart, something like Dries or one of the other shipping stocks, don't buy it. And if you cut these out as well, I mean, your odds are significantly more profitable again, so it's a very solid strategy. The other strategies that I'm tracking are multi-day breakouts, dip buying them off support. Again, it's something that I see Sykes do again and again and again, but it's only dip buying them off support with a catalyst, and it's like previous day support. This that I'm just starting to track now is multi-day dip buying the first green candle after a red one, after it's consolidated a lot and it's lifting up, and that's with a catalyst as well. And this is something more like swings that I'm tracking, and it's stocks that are grinding up on a catalyst like earnings or a contract win, and it's when I see them dip to a previous day low, I'm just tracking to see how much they rebound, to see if they're a good dip buy in the long term. So very interesting stuff, but now let's get on to the trades and the lessons learned. Okay, so this is FNJN, and I never like to lose. I never like to lose, but this is an earnings winner. It had earnings back in May. It's got a super solid uptrending chart over the past couple of years. It's recently had its multi-year breakout over the 230s level. And I mean, it's pretty much low float. The volume was light today, you can't say that. But I mean, on a stock which is multi-year highs, it's spiked on volume, spiked on volume, spiked on volume. It's holding its highs the whole way. I thought when it had this big push here, as in at 327 for just the last kick up of the day up into the 340s, the 350s, and I thought if it doesn't spike, I'll just get straight out. So I was in 327 out, like literally 324, 325, risked a couple of cents because I thought it could push 10 or 20 cents, and it didn't. But I mean, would I take the trade again? Probably. I don't think there's anything wrong here. Just sometimes it works out, sometimes it doesn't. I risked 3 cents to make, I mean, maybe what's this, 316 to 327, 320, maybe risking 3 cents to make 10, 12 cents. Yeah, every now and then when you're on a green week, you get a bit overconfident and you start thinking that you can do random things and still beat the market because you've just come off that green week success. And I made a lot of really dumb mistakes on a multi-day level and on an intraday level. And on the multi-day level, the stock's at $4. I was buying it on the 25th when it's at $15. So it's super overextended. The second thing is it had its move when it made the mother of all short squeezes on the 18th of May to the 19th of May. Now, if we look at this intraday, I hadn't made a trade in a while. I was feeling optimistic, and it's really much clearer on the 1 minute. So it was looking like a quiet day in the market in the morning. And all of a sudden, 8 minutes before the market opened, we popped up from 14 to 16 on drug news. So I was a little over ambitious, and I thought, you know what it is? It squeezed the last time in the morning, a couple of days back. So I was hoping for a repeat, but I played it like an amateur. I waited for the first green candle. As soon as it was pushing, I bought in at 16. And I was buying really off with no support in mind. I was just taking a gamble and hoping I would be lucky, I guess. And obviously, it didn't pan out. Managed to get out in the 1540s for a 50 cent a share loss. Didn't go really lower than that at all for the rest of the day, but I'm still like kind of glad I took my loss. And where do you take the loss when you're not buying near support? I mean, this was the first major error. The second error I made, and I guess we can scroll out a bit for this, when it next popped up to the 16s, I thought I will risk off this kind of support level in the 1570s and see if it's going to do it this time. And kind of held it in the 16s, held it a bit longer, and it kind of rode this trend line. So my buy point was here, and we can actually see it rode somewhat of a trend line up here. And when it starts to go, I'd not call this parabolic, but when it starts to overextend, this is probably the time to be getting out. So the time to be getting out is in the 1690s. I was in the 1610s. It was 90 cents of profit. But unfortunately, we see this, and I can zoom in a little bit here. One sec. The first sign of it, of it topping out is it kind of starts extending a little bit too much. So when we have this push off the trend line, it's trying to break the 17 mark, and we see it tops once here, slams back, which is okay, but if it can't push through, then it's time to get out. And when it's struggling to get through, your sell point is really in the 1680s, or this red candle in the 1670s. I stubbornly held all the way back down to the 1590s, 1580s. I didn't get out until down in here in the 1580s. So I took a 30-cent loss instead of a 90-cent profit or an 80-cent profit or a 70-cent profit. Just played it really amateur, just through frustration of not finding that winning stock. NBEV should have been a profitable trade. I mean, I'm just looking at this on a 2-month chart, but just out of interest, let's go back a few years. And we can see that this is a multi-year breakout. And it's a multi-year breakout on earnings. And the earnings were released around here, earlier on in May. And it was like SORL. It had this crazy run, consolidated, and then it was up on its next leg up. And I was buying it on the next leg up, which I think is a decent enough play, which I would do again and again. And if we look at the 2-day chart, it's already marked out. It had its run from the 560s to the 6s, and I was getting it on this dip. So I was kind of dip buying in earnings whenever it was holding its highs. It was on its next leg up. Everything's right with that. And I should have been in about the 6/6s, but I hesitated and waited a little too long. And I actually, when it pushed up, I tried to get in a dip. I managed to get in a dip in the 6/15s before it kind of consolidated and ran into the close up until the 6/30s. And I sold half into the 6/30s just in case, because I know we're going into a holiday weekend tomorrow. And played everything fine here. My mistake was when the stock is not so much when it's red by 1%, because it can still spike the next day. But when it washes out into the morning, just get out straight away. So I should have been out in the 6/15s, which is what I bought in. I would have took profits on half, and buying in the 6/15, selling in the 6/30s, and the other half would have been break even in the 6/15. So it would have been a profitable trade. I would have been very happy with the way I'd played it. Unfortunately, I let it come down here, and I got stopped out in the 590s, and I basically lost a little on commissions and a tiny little bit on the trade. Again, lack of discipline. We're back. I'm so sorry. Yeah, basically, find 2 or 3 setups you're comfortable with. Only trade those setups. Ignore everything else. and you should find that you're good. And if you break discipline, like I've broke discipline so many times, as long as you breaking discipline less and less and less and less, you should come good. So if you feel what I'm saying, comment below, love losses. Because you've got to love the losses and you've got to learn from them. Love losses. I'll see y'all later.